Hello, everyone. A very warm welcome to you. I'm Sushant Ori, representing Benham Reeves. I head the North India for Benham Reeves India. And today in our session, we would be telling you about why investing from India to UK, why are Indians rushing to invest into London properties, and how the data shows that we have a great potential ahead. Before moving on, let me just brief about our company. Benham Reeves. We have been in the market since 1958. We have presence specializing since 65 years. With more than 65 years of experience, we have 24 offices in London, as well as we have 15 international offices worldwide. We are one of the most established name in this business. Also, we manage more than 3,000 properties globally, which is a remarkable figure, along with an industry standard of 92% of client retention rate. So it makes us one of the global partners in terms of managing your properties, in terms of managing your wholesale portfolios in London, and also making sure that your right advice is taken care of in terms of planning your investments for future. Moving on, obviously, what all as Benham Reeves we get into some detailing on those parts. We take care of your investment advisory, whether it be where to invest, how to invest, taking care of your customer journey, whether it be through the areas of investing in London, across UK into various areas, giving you the dimensions, the dynamics, the studies, the surveys, everything with the concise facts and figures. Along with that, we take care of your property management. So a lot of investors, obviously, they don't be in London. So how do they manage? So we take care of their managing needs. We take care of their handovers, their snaggings. We manage it A to Z without any trouble. Along with that, also, if somebody requires a furnishing requirement, we have a company called InStyle Direct, where we manage their furnishings, their refurbishments, so that they don't have any problems, any hassles for any of the move-in rental agents. Rental clients. Also, lettings has been a part of a great business since long. We have very strong hold within London to let, obviously, your properties. If any of your properties are already in London and you would like to give us as a portfolio, we are happy to obviously let it for you. And if anybody requires any letting requirements, please contact us. We are more than happy to assist in that way. Also, in terms of taxation, there are a lot of complexities to UK taxation these days. And that's why we have a specialist team who specializes in terms of UK finance, in terms of managing your finances, in terms of tax filing. Also, we guide you with A to Z, end-to-end forms, managing it across, connecting you to the right legal lawyers, legal tax consultants, everything. So the idea is basically with Benham Reeves, you are taking care of wholesale solutions one-to-one without any hassles, hand-holded throughout the journey, and you just earn your returns sitting by home, relaxing back. Now, moving on to, obviously, with a lot of news around the world where why London to invest, is it London safe to invest, with a lot of negative news around, we have, obviously, what we will speak about is why London, why the fundamentals of London economy is growing, and why should somebody like an Indian or any other investor look into London as a global destination to invest. Firstly, London's economic growth is double than rest of UK. It is the sixth largest economy in the world. It remains still the stable, resilient economy. So there's hardly any jitters in between in terms of economic growth. 1/3 of the household, they still live in private rented accommodation. And that's a very important facts and figures, because still there is a huge demand of a private rented accommodation. And that's why your rental rates always remain stable. And as an investor, that is one of the key factors to look into. Also, UK buy to let sector, it's worth 1 trillion. Yes, you heard it right, 1 trillion pounds. And it represents an opportunity to invest in the sector with unprecedented potential going forward. So obviously, as the growth increases, the research also estimates that UK renters will outnumber the home buyers by 2039. So the more investors coming out, the more rental demand will increase. And that also represents 1.125 million households, demonstrating the strength of BTL market. That's such a large market compared to any other parts in the world. And that is why London still remains a strong rental market to look into. Also, everybody knows it, and London has been an established academic hub, consistently ranked as one of the top most student city, and that has been dominant throughout. In spite of the global scenario, center of the world, it is attractive to the students, and it's making buzz all the time for the student population. Also, it has highest concentrated financial firms and services, also professional services, which are there in London. Along with that, recently London has got a very strong tech sector, and that has really been one of the major points what it has boosted its economic growth as well. More people surprisingly work in fintech in London than Silicon Valley or New York, and that is a fact and figure. A lot of people would be surprised when it comes to IT, obviously coming Bangalore in India and going abroad. Obviously, you look at Silicon Valley, but now obviously London is one of the most, in terms of tech hubs, very established tech hub, and it's overtaken to a lot of basic Silicon Valley. London is London in that way. And also it is significant in terms of their infrastructure development. What we have done recently, we have done a Crossrail, which has been a phenomenal boost to the infrastructure development, connectivity within London from one direction to another, from north to south, east to west. And what it has done is it has opened up a lot of regeneration areas to a lot of people which were not expecting as a connectivity earlier. Also, with the new Elizabeth line, the connectivity is also smooth, as well as the flexibility in terms of going towards the airport, as well as nearby. It's very, very accessible. So that is something which, in terms of London as a good communication destination, it offers. Now, looking on to what are the current trends in UK market, and let's analyze that. Okay, this has been a strong growth of London, but what have been the current trends of UK market? So when we analyze the data, with Halifax, it reported 0.4% growth in July itself, the biggest month increase recorded by the lender since the start of 2025. That are very positive signs from the lending point of view, from the mortgage point of view, from the increase of potential point of view of people investing into the London property market. Also, another portal, which is Zoopla. Zoopla data shows that activity in housing market is stronger than 2024, which makes 11% of the demand higher, and agreed sales being more than 8% than the previous year, which makes it as a strong movement towards the market. Also, one of the very popular portals out there is Rightmove, and it expects the average asking price for home to rise by 2% in 2025. These are all might be the numbers as nominal, but 2% of the whole property market growth is giving you a great potential increase to the whole scenario of why property is moving ahead in London faster. Also, as mortgages, if you're looking at UK NRI nationals who are looking at mortgages, 64,200 mortgages for home purchases were approved in June itself in 2025, which is broadly in line with the pre-pandemic levels. And that gives you a dynamism that in such interest rate scenario and environment, we are moving forward with a lot of inquiries coming through the market. And the latest report, which shows that price has been risen by 1.1% on a monthly basis and 3.9% on an annual basis in May 2025. These are all facts and figures reported obviously through the online portals, completely giving a good positive picture to what London is looking at in terms of their current property market trends. Now, looking at deeper, obviously looking towards the projections, because that is the data's what we tend to analyze, and we stick to the data marketing where people can look into what is the scenario going forward for the investors. So when we analyzed obviously a 5-year scenario going down the line, if you look at 2024 to 2029, we're expecting a constant growth of 3 to 4 to 5.5 to 5% in 2027, and obviously stabilizing that growth to 4 to 3%. So an average growth of 5 years would be 23.4%. Considering 4 to 5% growth is an average capital appreciation, what you get into UK markets. It's a very stable, very stout, very normal economic valuations, which are growing faster now. In terms of UK housing prices, current range is about £358,000, which is bound to increase over a period of time and go up to 442 as average pricing, which is again an increase of £84,000 over a period of time, which gives you a good scenario of a healthy progress to an average pricing of London compared to any other parts in UK as well. Also, one of the important things which you see is the base renting rate, which was 4.75%. Previously, it was much more higher as well. It has over a period of time reduced. Central Bank, Bank of England has been constantly monitoring. It's gone down to 4%, expected 3.75%. And that is where the whole scenario of the mortgages and the buying is also increasing, because over a period of time, we would be looking at 2.75. That would be the mortgage levels on the pre-pandemic level, what used to be. So we are expecting a 2% from 2027 onwards as well. So there are a lot of properties, not only which you take it ready, but there are things which you can take it off plan as well, which you might look to complete in 2027, 2028, because the mortgage rate will definitely diminish if you're an NRI. Obviously, if you're a resident Indian, we have different restrictions to FEMA, but we can talk about it at a later on stage. In terms of inflation and market, it has been very constant. It has been 2.3%, averaging 2 odd percent throughout. And that gives great signs that, okay, it is a constant economy. London has been developing in the similar pace. UK has been projecting in the similar pace, and it can give investor the boost of confidence on the inflation side as well. In terms of annual growth, you're looking again with the nominal growth of 2.5 to 3%, projected GDP growth to be 1.6 to 1.7%. Also, it is very stable in the next 5-year scenario. The pre-pandemic levels have been almost realized now, and we're looking at a growth story which is about to come in next 5 years. So this is the time where the projection shows that it's the right time to enter the market, get into the UK market, get into the projections of London property market, and then look into boosting your valuations, investing into London. Moving on to the next slide, please. So the important part out here is, why are Indians investing and rushing to invest in London? And that is the major question what answers our webinar today as well. That why has there been a sudden rush? What we have analyzed over a period of last 1 year, Indians are rushing through to invest in London. To the surprise, firstly, the data is Indians are now the largest group of property owners in London. They are surpassed the British nationals, and that is a reality. And that is what the scenario looks like, that obviously over a period of next 4 to 5 years, Indians would be heavily investing into London markets again. Also, Indian investors are ranked among the top 5 overseas buyers in prime central London. The properties which were always under the a lot of British investors or overseas European investors, a lot of Indian buyers have been in the last past year in the central London prime areas, Mayfair, Belgravia. They've been starting on Indian investors to invest into it. In fact, Adhar Punapala, one of the famous investors, he purchased a penthouse in Mayfair as well in last 1.5 years, which is a phenomenal thing of a boost to a lot of overseas billionaires coming in, especially Indian billionaires investing into London market. Also, Indian investments in last UK real estate has grown by 17% last year, and high net worth individuals, family offices, they are leading the charge of with the reports of major billionaires, one of Mr. Ambani as well, purchasing the Stoke Park. It has been a great run for a lot of billionaires in terms of knowing the London valuations being really high. Now it is the right time. They have been in the past looking into assets and capitalizing on the deal values, where they are looking at increasing their financial market presence also. Also, yields in prime and outer prime London, they generally range between 4 to 5.5%. That has been a stable, constant net yield variable for the leasing and the rental market. Obviously, on the capital growth market, there has been the story which I told in the earlier figures. So if you combine with 4 to 5% of net yield in terms of rental, 3 to 4% of capital appreciation, plus a forex yield which can make it to a 1 to 2% on variation, although it is much more higher. Indian investors can look into a good scenario of having a double-digit overall combined growth in terms of near future. Also, surprisingly, 140,000 Indian national received student visa in 2024. And that is where our strong education market of London, which I was highlighting earlier, is being projected with the numbers, what it shares. And a 35%, this is a jump of 35% in year on year with student investments, student visa, sorry. This is making a buy to let properties even more further high on demand and even more expensive. And that's gone really, really high within the UK scenario. Any student coming obviously in the August and September, they can feel the heat when the market doesn't have anything for them to offer in terms of rental. There has been very, very less of supply inventory for them, and that really makes it much more wonderful in terms of knowing that okay, this is where the strong rental market has always been for the UK. Also, interestingly, you must have seen recently the India and UK trade agreements. But prior to that, also a very good news has been there that the total trade of goods and services, plus the export imports, obviously between India and UK, were approximately 44.1 billion pounds. And it is in the end of quarter one 2025, which is actually an increase of 10.1%, and which gives an even more positive sign that now is the time where a lot of Indians are looking for a trade valuation. With the trade deal recently happening, UK economy opening its doors for Indian laborers, Indian investors, Indian government. The imports and exports are now further obviously looking for an uptick going forward from here. And that's why, again, a lot of manufacturing hubs as well, export houses, they're looking at setting up a base, companies and everything. For any of those assistance, we are more than happy to welcome you on a discussion on a separate line as well. So, right, this makes us arrive to a very important question that in terms of property investments, where should Indians invest? Ideally, yes, prime central London, everybody talks about it. That's always a favorable destination to look into. Indians keep on investing into some of the financial market areas like Canary Wharf. Those are all established areas. Definitely a great asset to look into, no doubt about it. But the price you pay is kind of expensive at the moment, obviously because London is expensive as a market. But still, there are certain areas which we find a regeneration happening very, very rapidly. Some of the areas are already regenerated, and some of the areas are obviously undergoing the more regeneration phase as well. But in terms of regeneration, what it does, it gives a capital value increase in future for our investors in next 10 to 15 years. Also, it does a strong rental because it's already half of the place is regenerated. So there's an established rental which is already there. And also, it gives a great scenario to look into areas to invest into different domains of London with a less capital in place as well, rather than obviously having higher capital value to invest in central London. So some of the top pick areas, what we have seen through are starting with Vauxhall Hall and Nine Elms, that's in SC1, Southeast 11, Southeast 11, SC11, sorry. So this area particularly has been a huge demand into a couple of projects. Obviously, there's Oval Cricket Ground right next to Vauxhall Hall station as well, which has been boomed up into sporting arena. Sports people obviously getting into a high demand next to the cricket of Oval Cricket Ground. Recently, we had the India win out there, and it was very historic and prestigious. So such iconic venues, people love to obviously spend their money, and the price points obviously in these areas, you're looking at one bed typically around 650,000 pounds. Which in a current scenario is a very good attractive buy because having said that, this is just hardly a 10-minute drive from central London. Also, it is well connected from Vauxhall Hall to central London. You're taking hardly 8 minutes in terms of tube as well. And another area which is along with Vauxhall Hall within the vicinity is Nine Elms, which is also getting regenerated along with the Battersea, which is already a big regeneration which is undertaken. There's a lot of new fresh population of students, a lot of young professionals, a lot of IT dynamics. Everybody is looking into renting or buying or a scenario onto those areas because of obviously it greatly connects through the Northern Line, as well as the average price points are currently in the range which is quite affordable to a lot of investors. And the gross yields, you're looking at around 4.8% with the average annual rental around 29,500 pounds out there annually. So if a gross yield you're looking at 4.8%, so that makes a good investment scenario considering it's closer to zone 1 central London and considering its connectivity. Also, another scenario where we took an example of another regenerated area, that would be Wembley. Wembley, obviously, no thoughts to it. A lot of Indians know about Wembley. They have been quite popular in terms of finding Wembley Stadium very iconic. Prime Minister Modi as well had an iconic speech at the Wembley Stadium. It has a lot of catering to arenas, everything across. And having home right across there, there's already a regeneration which is undergone with few of the developers. The student population has been really popular. There's a lot of colleges which are nearby, few of the outlet malls, eateries. These are some of the major revamp areas what you have seen in last 10-15 years to Wembley if somebody visits to Wembley Park. So average price still it's quite in terms of Indian valuation 380,000 pounds, which makes it a very good attractive buy considering the Indian scenario of investors at the moment investing into the various regions. It's still a good buy to let asset. Obviously, gross yield is slightly higher here because of its popularity as well. So you're looking at 5.4% gross yield. In terms of your annual rental, 20,400 pounds as an annual rental on your investments. So it makes as a low cost, low key scenario a very good investable zone to get into. Also, moving on, there would be another area of regeneration which I would highlight would be Sadak, which is going a massive regeneration. Connectivity is amazing. The colleges are equidistant. It's hardly next to the London Borough Market, next to the Shard. It's very iconic as well. A lot of Indians prefer those areas. Knightsbridge is not too far off. So these are the iconic spaces within London what person looks into. An average price out here is 665. You're looking at with the annual rental again 29,400 pounds, giving a gross yield again 4.7%, similar to what you have the Vauxhall Hall and the Nine Elms. This is an area to look forward for as well in terms of connectivity. Towards the east side, you're there in 5 to 10 minutes in the financial district of Canary Wharf. You're there in 10 minutes towards central London. So it makes it a apt way of being in the middle, and also the iconic markets nearby, student population nearby, the Shard nearby. It is an area to look forward for in terms of regeneration, and a very established area currently as well. So rental becomes a very stable scenario. One of the more areas which again is looking as a complete revamp is West Ham. The area to look into as a potential is it's a part of a wider regeneration of London transformation because it's benefiting from Olympic legacy regeneration. It is affordable housing at the moment with central districts. It gives you a scenario where you have like 5 major tube lines connected towards central London and the other parts. And that is quite rare in terms of finding it in one particular area or a station. So having a lot of tube connectivity makes it one of the uptakes. In terms of regenerations, you're looking at average price point of 520,000 pounds. Gross yield, again, you're looking at with average rent of 24,600. Gross yields looking approximately 4.9%. Area to look in next 10 to 15 years to have a transformation. Connectivity in terms of regeneration, it is one of the top picks as well. And coming on to finally, on the top 5 recommendations at the moment, we look at White City. White City already has undergone a lot of regenerations with completely, it was formerly known as a BBC headquarter site. White City has been reinvented with a lot of media, fashion, hub, education. There's a new campus of Imperial College, which is coming right across, and it makes it even more interesting for the student population. Also, Westfield Shopping Mall, which is right across there. It is striving for demand. It's one of the largest shopping malls in entire Europe in terms of brand values, in terms of connectivity. If I say it would be hardly 8 minutes away from the main central London, it is zone 2, but still central line and other Hammersmith line, great connectivity around that area makes it one of the prominent destinations for the regeneration to happen, as well as average price point, since obviously it is much more within the central zone. It is slightly in the 730 because it is next to your major areas like Notting Hill, Shepherd's Bush, and the scenario is obviously these areas are well connected. So an estimated gross yield, you're looking at 4.6% with an annual yield looking rental scenario of 33,600 pounds. So you're looking at a fairly good rental value, already an established investments, already a rental value which is there. This is top pick areas of 5. Obviously, we have many more. We are happy to have a discussion according to the client scenarios, customize according to the area preferences. But these are the areas which look like a price point to be investable at the moment, and also in the future gives you a stable rental, as well as in future it gives you a higher demand value to things. So in the end, obviously, we have two offices back in India. I represent the Delhi office. We have a Mumbai office team. So we have two offices in India. We're happy to take any of your questions. We are happy to obviously answer any of your scenarios where London property market in terms of in-depth consultations. Also, to conclude, London still remains one of the most resilient, profitable property market in the world. For Indian investors, what is in store? It offers a very stable growth. It offers attractive rental yield. It offers a global prestige of demand being high. I own a asset in London. It's always there. Supply is limited, as you know, in London, so it goes off very fast. So the regenerations and the areas which continue to unlock new future, you have to keep looking into the scenario, keep inventing, reinventing, and look into the scenarios where things can improve. And at Benham Reeves, we obviously having over a 6-decade experience, we will guide you, handhold you in this journey of every stage of your investments. We would be from sourcing to your purchase, your furnishing, lettings, management. We ensure a very seamless and a profitable experience to our client, so that by sitting out here, he doesn't undergo any of the hassles. And for anything, we have two offices in India, especially established for our Indian clients, taking care of Indian laws, Indian taxations, as well as protecting them of the UK taxations which are there. Apart from that, we do take care of the NRI markets, global investors. We're more than happy to have any inputs and look forward for opportunities of having a mutual things across. Thank you so much. And I open the floor for any of the question answer sessions, please. Okay. Let's take a few questions. So one of the investors has highlighted that how safe is the investment compared to India in London? And can Indian invest into overseas with their personal loan? So it's a very interesting question. Obviously, yes, Indians can purchase properties under their name individually. There is a scheme of LRS, which is permissible through the RBI. $250,000, obviously, you can remit per person per financial year. So that makes it like if it was a family of 4, you can remit up to $1 million through a TCS, which is deducted of 20%, which is again you can claim it back as a government thing. So they're not deducting as such, but they're just only claiming it for the money to be remitted across. So it is absolutely within the legal purview, firstly, to invest in the individual names overseas in London. Secondly, yes, it is absolutely a bulletproof and a safe investment to invest into London, unlike obviously certain areas of India which might be looking slightly not that legally protected, I would say. But yes, it is well legal market. Any of the transactions goes through lawyers, solicitors, any of the AML checks, any of the KYCs, everything is so well checked with the developer. What is the title, the presence, what has been the documentation? So every look and corner has been checked by every solicitor angle as well as the developer angle, and whatever has been promised gets delivered on time. Unlike a lot of developers back in India, they foresee you like, okay, they are having an extension and demands going high and everything. It is much more safer, much more legally protected. Whatever is committed, it gets delivered. Moving on to another question. Do you deal with new builds? One of the investors, Mr. Mehul, has asked. Yes, Mr. Mehul, we do deal into off plans, new builds. We have greater deals. Obviously, we are happy to discuss that on a very personal level wherever you're based in India. We would look forward for your discussion. We deal into resale. We deal into scenarios where a person requires something specific. They can always engage us into certain areas, into certain recommendations. We can always give you an off-plan recommendations, like few of the regeneration areas. Otherwise, we have other areas depending on your budgets. We can definitely look into the scenarios. So that's a very interesting question from Mr. Nikhil Bajaj. Why should we consider investing into UK with such negative news coming on and in terms of debt structuring? Okay, so to answer that, yes, that's a very good question, because a lot of things, news and negative scenarios do make a decision on hold, or maybe make sure that, okay, right now it's not the right time to invest. Obviously, I have presented the data in our webinar just now, that why Indians are looking to invest on hard facts, that this is the scenario where Indians are looking to invest. But to answer your question, along with why UK will remain resilient, stable as well, the recent data coming today, right now, obviously, I was seeing morning news as well. So if you look at the London Stock Exchange and the indexes, they have actually outgrown with compared to other G7 economies, and they have actually outperformed, which was a surprise to a lot of British investors themselves, that how it has outperformed the numbers in terms of G7. Also, it gives you around 1.7% stable. Right now, we're looking at 2.2% in terms of number of IPOs. Yes, the number of IPOs have been little subdued, but the investors are looking to get into a higher market value now in terms of investing into new tech startups, new ventures, and a lot of IPOs would be coming up in next 2 to 3 years. What you see it within the London Stock Exchange. Also, one of the interesting data which I saw it today was there has been a significant movement from America to UK. So there are a lot of Americans who were billionaires, were not investing. They are again putting their money back into the UK market as well. A lot of Indians who were based out there, they are also shifting their money as a scenario to London. Lot of student population which was initially moving towards that side, they're moving back to UK. Lot of Indians who are in the hardcore area of tier 2 cities, tier 3 cities. The data shows that there has been a significant movement in those lines in terms of student population. Also, the debt restructuring, if you're looking at, there have been models. Obviously, we can talk about that when we do a one-to-one discussions on how to structure that and all those things. But in terms of leveraging, we are a little restricted with the RBI in terms of how to leverage. But there are structures with companies or other scenarios where you can look into debt structuring, and the scenario where it becomes you a very stable soft economic thing, where you're always constantly having good liquid asset as well as liquidity in terms of putting into markets, and the property market scenario where you can combine your risks as well. Okay, moving on to another question. Mr. Sami Jain, he's asking, given LRS limitations of 250,000 per person, how can payment by uh, Monet solutions in property around 750,000 pounds? That's a very important question. Okay, so if you have a restriction that is only per year as a scenario, and that is only to a particular one person, so you can obviously combine it through a family LRS, and then the money can be transferred around 750,000. If you're looking at a complete same year property or a resale property or a complete funds to look in, if you're looking something to complete next year, obviously you have a higher share. So you complete with $1 million, along with you get another year for a $1 million. So you're looking at $2 million. And subsequently, if you're looking at 2 years post possession, which is 2027 supposedly, so you have 3 financial years. So there are ways and means, obviously you can work it around. Also, in terms of what are the other scenarios when you have a immediate fund to get into, we can always look into the scenarios individually with family, with the whole structuring around how to go about, and we are happy to obviously do an advice on that. Moving on to another question, we're looking Mr. Sapan Garg. Okay, he's asked, how remit money for buying and remit back for selling in future? How does the tax work in terms of rental income and capital gain? Okay, so in terms of tax advisory, obviously we do have tax consultants who can advise you in terms of capital gains, in terms of your repatriation, in terms of making sure that your rental income is secure. We can always set up your overseas account, managing with banking scenarios. We can get you in touch with the right person in terms of tax, in terms of your banking financials, in terms of advisory. So it would be great if we can have one-to-one discussions on those lines in terms of helping you in all the scenarios. Also, a follow-up questions, can we get loan and mortgage from UK bank at cheaper rates? So that's actually a very important question. A lot of Indians do ask this question, and as a FEMA restriction, obviously Indian buyers are on a personal name are restricted to take a mortgage as an Indian resident overseas. As an NRI, there's no problem, obviously. In terms of structuring through a company, we do have options where the UK lending and scenarios can be looked into. There have been different methods through structuring. Again, I would say that it really depends on case to case basis. Obviously, person to person. If you have any of your son, daughter studying in UK, they have become a quantified NRI. We can have scenarios in terms of taxation, giftings, everything as a very detailed study we can look into depending on case to case basis. So we are happy to assist in our way. As I told earlier, we have two offices. One is in Mumbai, one is in Delhi. We're happy to obviously be anywhere part of India. If you're looking for assistance, we're happy to meet one to face. We can have a Zoom. We can have a in-person meeting as well, and that will give you a more better scenario. Also, another follow-up question. I'm an Indian-based NRI maintaining NRE account in India, so understand to take a loan or mortgage. Again, really depends on NRIs. Obviously, can take the loans. They are permissible. Now, it really depends on what is the status at the moment. How many years you've been? Are you overseas? Are you back in India? What is your current scenario? Are you eligible? Non-eligible? We can assign a proper mortgage consultant to you who can give you the proper brief on those lines on the rental property. Obviously, we are there to brief it as well. And along with that, yes, definitely for the NRI, we cater into special market conditions where your mortgage rate are more preferred, more valuable, and we can handhold on the discussions. Obviously, more than happy to shoot more questions in person on those scenarios. Right. I'll take the last question quickly. How does Benham Reeves support after purchase? Okay, that's a very pertinent question that a lot of agents obviously might be just moving around. Okay, we've sold and that's how it is. As Benham Reeves, as I already said, we support in terms of not only doing your sales, your lettings, your property management, but we give full end-to-end service in terms of if you want a furnishing as well, if you want a property management to be taken care, the taxation to be taken care. So the idea is basically to whole soul handhold the client from A to Z and make sure that he's well handled towards the sign. And that has been our expertise since 1958. It's a 65-year-old expertise what we take into the thing. We have the weightage, we have the right legal profile, the right property management professionals, we have the right taxation professionals, we give the right advice for the mortgage, we give the right advice for what to take, what not to take in terms of purchase of property, what are the areas to look into, and what are the areas to renting into. So all these things, obviously, we are happy to discuss in a more larger session of why Indians are looking to invest now in London. And if you haven't invested, please, this is the time. This is the time to look into where the market in the next 5 years will give you a great stable growth in terms of London. And you should be with the bus of having a house in London and making it a bigger dream. Thank you.